Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
We are back for another episode of the Tech Behind FinTech. Always excited to be here. Always excited to talk about these topics. Let's get into it. I want to welcome my guest, Sai Arora, CEO of Mercoa. How are you doing today, Sai?
Doing well, Namdi. Thank you so much. How are you?
I'm doing great. Really good. Happy to be live. Happy to be getting into this topic beyond payment acceptance, the power of bill pay and upmarket shifts. Pretty excited about this topic, but we're going to do some housekeeping things, and then I'm going to introduce Sai to the show. So we are streaming live from Facebook, LinkedIn, YouTube, Twitch, and we also have another stream going from Instagram. If you are on Instagram and you want to be part of this show, go to the techbehindfintech.com and you can put your comments there and we'll add it to the show. Always your questions, comments, we love them. We love the DMs as well. But if you want to be part of the show, knock out a comment and we would add it. We would answer your question. If you want to give insight to today's topic, please feel free to do so. You can do that on Facebook, LinkedIn, YouTube, and Twitch. Without further ado, I am your host of the Tech Behind FinTech, Namdi Oswagu, and I want to introduce Sai Arora. Let me go over Sai's excellent bio and his company. So, today's title, Beyond Payment Acceptance, the Power of Bill Pay and Upmarket Shifts. Sai is the CEO of Mercoa, Inc. Mercoa, backed by Y Combinator, helps B2B platforms offer their users bill pay and AP automation with a single API. What sets Mercoa apart is not only its remarkable innovation, but also its prestigious backing. As a proud member of the Y Combinator family, Mercoa benefits from the support and expertise of one of the most renowned startup accelerators in the world. This partnership is a testament to Sai's ability to inspire confidence and attract top-tier investment in the pursuit of transforming industries. Prior to founding Mercoa, Sai was a payments lead at Bill.com, and his co-founder, Sandeep, was a technical lead at Stripe. The two founders have worked together on side projects for over 10 years and have founded profitable B2B companies in the past. What an amazing bio. Dude, I love the stories with two friends getting together and building something phenomenal and changing the world, man. That's awesome.
Thank you. You know, it's something I talk to a lot of people about, is just kind of how rare our team dynamic is. Like, Sandeep and I met 10 years ago at our first jobs, and kind of from day one realized we were both motivated by the same things. We both love to build and really embrace ambiguity, and it's been a great ride since.
So you guys both worked at Bill.com together or Stripe? How did that work out?
So taking it back, over a decade ago, my first job straight out of college was as an IT analyst at Cisco. And so Cisco actually moved me from Columbus, Ohio, where I was born and raised, to the Bay Area. And just during my time there, I actually met Sandeep at a hackathon. We worked on a few projects together, realized we really vibed and complemented each other's skills. And from there, started hacking on things on the side. We've tried to start multiple companies in the past and built a bunch of products together. And I think the thing that kept shining through, no matter all of the ups and downs of that journey, was just the team dynamic and kind of realizing that this is the dream team for us.
Absolutely love the story, because I have friends like that at which I started ventures with and so forth, and we went to school together. So when I hear a similar story, it definitely touches my heart. And to see you guys actually win at this, it's a beautiful thing.
Thank you.
Y Combinator experience, how did that come about?
Yeah, so what's so interesting is Mercoa was something that I originally was thinking about when I was at Bill. And so actually, around this time last year, on September 12th, which was the deadline for the YC application, I kind of raked Sandeep over the coals and was like, look, this idea has been sitting in my head for a year. We have to apply. We just have to put it out there and see what's going to happen. And so We basically took all of the experience of our past products, listed out every assumption, every single thing we needed to do to get this business off the ground, from a napkin idea to some sort of MVP and then a company. And we applied. And about 10 days later, we got the orange email asking to interview. And a few days after that, we were accepted in with the contingency that we had to quit our jobs immediately. And so, this month kind of set a lot of things in motion 12 months ago.
Oh, wow. Oh, so this is like relatively new. So
Yeah.
it's a lot you drop. We have a lot of startups that listen to the show, a lot of founders, entrepreneurs, people with ideas, big dreams. All right. So let's just rewind on that. It's a lot to unpack. Right. So you've been sitting with this idea for like a year. You're like, you and Sadiq go back a decade. And you're like, listen, we have to make a move on this. Do you produce some sort of MVP? Do you produce some sort of product? Or is it just more so your, lack of a better words, a very high level business plan? What do you actually use to get into the Y Combinator in that interview?
Yeah, so really, I think we didn't have a product when we applied. We just had a very high level, not even business plan. It was more of like an execution strategy. And so for a little bit further background, prior to the YC app, I had actually started talking to multiple fintechs about bill pay and accounts payable and how I would want to build that for their organization. So I was interviewing around. I got a few job offers. And what was funny was, I remember this was like September 10th, sitting with a job offer in my hand and just being like, do I commit to this or do I really work on this idea? And I went back and forth for a little bit. I talked to my wife about it, and she was the one who was like, look, you're not going to shut up about this idea. Like, maybe you should think about it seriously. And so I actually wrote an execution strategy plan for what we were going to do to get Mercoa off the ground. Ran that by my wife, ran that by Sandeep. Once we got the seal of approval there, I actually rejected the job offer and just decided that, look, YC or not, we're going to go and raise money for this in February of 2023, and we're going to get this going. I'll start the groundwork now. And so luckily for us, that plan informed most of our application. And then, getting the interview, really for me, it was all about just talking about my plan, talking about what I knew was true in the market from my experience at Bill, and really just talking about the vision that we were laying out and how we were going to go about it. And I think this was like the first time we did it this way. Normally, we've always been very execution focused. So have a thesis, come up with some sort of MVP, talk to a few people, and then launch it. But with Mercoa, we kind of threw all of that out and said, look, if we're entering a regulated financial space, let's think about this a little deeper than just talking to customers and starting to ship something. We need to have our ducks in a row here, because unlike B2B SaaS, this has the potential to either make or break someone's business. And so we can't treat it as lightly as the past.
All right, so that's the interesting shift right there, because we've all in this world, we all read the lean startup, we heard the stories, right? Let's build it, let's test it with real customers, let's see what they think, let's get that feedback, constant improvement, and eventually ship off a product. So you threw that to the side, and the main reason was because of the regulation in the environment that you're going into. So it's like, all right, let's come with a lot of the research first. What did because hearing you talk, before I get into that, right?
Yeah.
You mentioned your wife. Does she have a technology background?
My wife does not. So my wife, she has a healthcare background. She works for a large biotech company that does cancer screening products. So I always tell her, between the two of us, she's actually doing real good in the world. We're helping people get paid and make payments faster, but she's actually contributing to, helping people heal from cancer and really come away from these fairly traumatic life instances.
And the reason I asked that question was because you mentioned that you ran the execution plan by her. So I didn't know if that was like your quote unquote third employee. Like you basically had that expertise with Sandeep, yourself, and your wife. Okay, makes sense. So you ran it back just to get another perspective on it. So now you ship this execution plan to Y Combinator. They go through you get the email for the interview process. What's that like?
Yeah, so the interview is 10 minutes. And in that 10 minutes, the YC partner is basically trying to poke holes in your idea and trying to figure out, if you've actually thought through this, is this something that, based on their perspective of seeing so many different startups, if there is actually a play here, and really understanding sort of our motivations and how we're thinking about this. So what's crazy is like Sandeep and I have interviewed with YC in the past for different ideas. Every time the interview goes by in a blink of an eye, and we always sort of walk away like, what happened? And I think this interview process was no different. It was basically the same thing. The only difference though this time was no matter what questions came up, I exuded confidence in the plan. Like ultimately having put that down, it really helped sort of shape the framework for how I was going to get this business off the ground. And I think it was less about asking YC for permission and more about kind of showing them, look, this is the map that we're going to follow. We may not hit the destination right away, but we know how to pivot and change course and direction as needed to get there. And I think ultimately that plus our team dynamic, the way that Sandeep and I have executed in the past is what made the difference for us.
The previous interviews you've had, because obviously with this particular bill pay, you have a lot of experience in it with Bill.com and Sandeep with Stripe. The previous interviews you had, did you have that for the ideas that you pitched? Did you have that level of experience with those ideas?
Yeah, so I'd say I definitely had experience with the problems we were solving. I think the context that I was missing at the time was sort of that higher level perspective beyond just the product and the customer of where is the market going? What are the trends that will fuel the growth of the business? I think that's a little bit more strategic. And throughout the last 10 years, it's really been an exercise of learning the tactics first, building upon them and starting to execute, and then ultimately realizing sort of how all of the tactical stuff builds to the strategy. And so, for all of our past interviews, I think looking back, we were always talking tactics instead of strategy. We were always sort of thinking next level. We weren't thinking further ahead of, how do we take this from 5 customers and a handful of small payments to a large $1 billion business. And so for Mercoa, we kind of did the opposite. We worked backwards. I had a ton of context on the problem and opportunity from Bill. And really it was, what do we have to do to get there and start actually, really serving the true opportunity in the market and thinking about it from that high level first, and then working backwards in terms of what are the tactics we'll use to get there.
Awesome, because they say, right, when you're trying to hit a moving target, right, you can't aim at the target. You have to know where the target's going. Yep. So that's what you aim for. So it looks like from your experience and also looking at the whole market, understand where the trends are going, seeing where, okay, how is the problem today may not be the same problem a decade from now, right? And exactly. How are we to solve that? And I think from hearing you talk, that is what the difference maker was between your interview 12 months ago and the prior interviews that you had with different idea pitches that you've had. And I think it's a great lesson that the audience can take from this. Like I said, with the Tech Behind FinTech, we talk to startups, we talk to people in various stages of their cycles. And then you have a lot of people with ideas that listen. So I know that today's topic is on bill pay. We're going to get into it, but I thought it was very important to get your background and get how this whole thing came about. And I think it can inspire future entrepreneurs and so forth.
Definitely.
With today's topic, though, bill pay, can you describe, first of all, this is one of those shows in which, everyone here talks about, well, not everyone, but, we're in this business, we understand the concept of bill pay. Yeah. With the context that we just discussed in terms of understanding this industry, seeing where the trends are going, I want to approach the bill pay question like that. Yeah. What is it, right? What is this industry? And then the third, where do you see this industry going?
Yeah, great question. So I think the best way to really think about it is to actually take a step back and first understand that there are actually 2 flavors of bill pay. There is consumer bill pay, and then there's business bill pay. And so with consumer bill pay, this is usually stuff that involves paying utility bills, paying the types of vendors and merchants who we interact with in our everyday lives as consumers. For many folks, they may be used to actually using Zelle to handle all of their bills. And so at Mercoa, when we talk about bill pay, we're not talking about the consumer side. What we're really talking about is B2B bill pay. And there, bill pay is a little bit less about, let me pay my utility vendors and let me just pay these small bills that are coming in. Bill pay is much more about helping businesses manage when and how they pay their bills and invoices. So like for context, the average small business will have anywhere from 50 to 100 invoices they need to pay per month. Each invoice comes in at a different date. It'll have different terms in terms of when they actually need to pay it. And the vendors have different desires for how they receive the payment. Some folks accept ACH, others will take a credit card, some only accept check. And so the interesting thing with bill pay on the business side is that it becomes less of this feature and much more of this process of when should I be paying my invoices and what is the most ideal path for me to do that? So that's what when we say bill pay, we're talking about all of the business side of it and how we help our users kind of manage the spend side of their house beyond just cards.
All right, that's interesting. Totally get it. And thanks for breaking down the consumer versus the business. So we're talking about B2B from this perspective, and I think that gives some insight to the audience. Overall, because we talked about moving targets and where the industry is going. What do you see industry like? Where is it going? What do we?
Yeah, so there's a couple of trends we're seeing, and I'll break it down between sort of, again, I'm really big about categorizing things. So bill pay in the B2B context can also be referred to as accounts payable automation. And so there is a family of products that are AP automation tools. So things like our products like Bill.com, Tipalti, Melio, Coupa, all of these systems are optimized for an accounting team to manage when and how they pay their bills. And what we're seeing with these sort of horizontal AP players is there's a couple of major tailwinds driving them. One is a further globalized world and connected world. So cross-border payments is really big for these horizontal platforms. How do I help my customers pay vendors overseas? How do I ensure vendors are receiving those payments instantly, whether in their local currency or in USD? And then how do I ensure that I can actually speed up the transmission of those funds? On the other side, for the horizontal players, the other thing that they're actually looking at is the accounts receivable or invoicing side of the house. And what all of these horizontal platforms have realized is that they have really great insight into their customers' spend, but what they end up missing is their customers' income coming in. And when you have both of those pieces on a platform, you're actually in a position to be able to start modeling your customers' cash flow. And what we're seeing now is for these types of build AP platforms, they want to understand cash flow so that they can actually start to deploy new payment products to further monetize and help their customers get through any sort of cash flow liquidity issues. So, if I know the days that you are going to be cash flow negative, I can offer you an on-the-spot kind of loan, optimized and tailored to your business, underwritten based on your transaction history, and really give you the flexibility you need as a business owner to continue moving forward. And like the term for this kind of strategy is some people call it the financial operating system. Some people call it a one-stop shop of money in and money out. But that has been that's one of the bigger general trends we're seeing across the market. I think, recently Intuit just announced the launch of a new product called Money by Intuit that's offering this kind of out the gate an all-in-one AP and AR solution is how they refer to it. At the same time, you're starting to see folks like Bill that are really launching products to go deeper on the spend side and then looking to follow up with invoicing in the future. Now, putting that family aside, there is also a group of products that are vertical SaaS companies. These are organizations that are targeting a B2B customer within a single vertical. So think like a banking product for landlords or a field services platform for plumbers. These types of organizations are going out. They're giving their customers one place to invoice, one place to bank, and one place to manage all of their payments out. And for the vertical SaaS companies, the financial OS strategy is what they're all driving to. Everybody wants to be that one-stop shop for their customer. creates for a super sticky product experience and positions you to be able to help your customers grow. It's not just so much that I'm going to offer you a service and help you, optimize some part of your business. For a lot of folks that are serving more of these SMB vertical customers, they really want their platform to be the CFO of their customers' business. So that's kind of, high level, the trends that we're seeing on both sides today.
Yeah. Wow. Great stuff. One to unpack stuff. So as you're talking, what I'm thinking through is how many digital businesses turn banks, right? So you look at Facebook as a bank, but then you have WhatsApp, and then you have all sorts of payment processing through it, but they don't have to abide by the same rules as bank. And as you're describing this, I'm seeing a similar trend based on the industry, right? Because now you're going after, especially when you describe the niche markets, right? So a little background of myself, right? I besides technology, been in real estate for a while, have rentals and stuff like that. So, and I've seen the platforms for property management where now it's real niche, but then they're introducing payment solutions. So it's 100% online in terms of what you just described. Very interesting. Another thing, right, I see from a cybersecurity perspective, we have something called business email compromise, right? So you have vendors, right, sending invoices to, well, they're not real vendors, right? These guys are the threat actors, and they're sending invoices, and then someone gets at the company and they just go, oh, okay, this is the person I know, and just pays it. And they just lost $50,000. I was with a client about a year ago, so they succumbed. They had an issue with that, and what they ended up doing was just splitting the loss between them and the vendor.
Yeah,
I see solutions like this eradicating that.
Yeah.
What are your thoughts?
Yeah, so it's interesting. I think like billing fraud or invoicing fraud, it's something that usually is a little bit more common when you are billing larger companies. So like you're a large enterprise, you've got a very sort of like standardized AP process. An employee receives an invoice, they forward it to another team. That team then, if they see that this sort of spoofed vendor already exists in their system, then they'll go ahead and send out a payment. What we are seeing is that in our case, like we really see this as like the way to kind of get rid of that variable is to bring both vendors and payers to the same table, have them on the same platform, and have an easy way for them to build a relationship, be able to work together and collaborate, and include the invoicing process as part of that. And so with that, and with some of the verification stuff that we can do on both sides, we can actually reduce the chance of invoice fraud.
That's really good. You also mentioned various. I think something got paused here. Part of that. Okay, I'll reconnect it. You also mentioned currencies, right?
Yeah.
So big trend in crypto, and what if a vendor wants to get paid in crypto? Is that something that's handled with this solution?
Yeah, so we've talked to a few crypto companies. I think, so the way that we've positioned Mercoa is that we never want to force a customer of ours to strictly use the payments that we are providing. The way that we look at Mercoa is that as a customer joins us, they start to scale and grow, they will want to bring elements of the payment experience in-house, whether it's for better unit economics, better security standards, and deeper underwriting on both the payer and the vendor. And so we've built our platform in a very flexible way where you can actually use the payment methods on Mercoa, but at the very same time, use Mercoa to trigger payment methods that you might have natively. And so in the case of crypto companies, like if you're a banking platform for DAOs, right? And you want to enable these DAOs to be able to pay their bills and invoices with crypto to a vendor who's willing to accept it, Mercoa can help you with all of the processing of the invoice, setting up when and how to schedule that, ensuring that the vendor is brought in to tell us how they want to receive the payment. But then the actual triggering of that crypto payment could happen through the company's own native treasury solution or payment rails themselves. We don't necessarily want to be the payment provider in crypto. It's one of those things where like it's out of my wheelhouse. It's not something I'm an expert in. And I think these crypto organizations are the experts. So it's better to help them provide the automation, help them provide the experience that gives their customers organization, and then let them handle that crypto payment disbursement themselves.
Oh, good point, right? And then at any point in time, though, they with the tool that you built in between, they can still manage that. They can still see past transactions, take advantage of that, and so forth. That makes perfect sense. You mentioned growth. So how flexible are the systems for businesses undergoing rapid growth? So you see a situation where this startup is at point A in 2023 we're in, right? 2024 they start blowing up. 2025 they keep growing. How does that B2B system adapt to that growth?
Yeah, so I think the way that we've looked at it is as our customers are growing, all of them are trying to drive through profitability, especially in this kind of environment. And one of the first places that they're generally looking to reduce cost or try to increase their unit economics is on the payment side. So like as you get scale, what we've generally seen is organizations want to get closer to the bare metal payment rail as possible. And so what this usually means is they'll bring in some sort of treasury management solution that they're handling and using internally. They might even set up some sort of FBO account with a bank, like a for benefit of account. Basically, there's a special bank account that allows you to move money on behalf of your customers. And so as these organizations are setting up these systems, we plug into those in a pretty seamless way. We're able to trigger notifications and webhooks to hit those systems and be able to complete a transaction. So, if a company joins Mercoa this year, they may use us for everything, right? Payments, automation, all in one. Next year, they may come back to us and say, hey, look, I've raised a bunch of money. I have, thousands of customers. I now want to control more of the payment stuff. So I went to like JPMC and I got an FBO account and I'm going to handle all of the payment side. For us, we don't see a problem with that. We say, great, we will go ahead and trigger all of the transaction details for your team to handle through that account itself. That's what we call our graduation process, where you can actually move away from us handling all the payments and compliance side. You can take that on yourself. You're obviously taking on the risk as well. But we're very happy to play nicely with that because we know that for us, the vision is to continue to provide as many payment options for payers on how they pay an invoice and for vendors on how they receive a disbursement. And, wherever a customer of ours doesn't have those options, we'll fill in the gaps. But as they're looking at bringing on these kind of specialized systems, we can gracefully bow out while still providing value to them.
A lot of fintechs end up, bigger banks, like you mentioned JPMC and the more institutional banks, they tend to say, okay, but we're not building this in-house, great service, we're going to partner with a system to help on the benefit of our business banking customers, whether it's an institutional bank, credit union, community bank. How does that process work?
Yeah, so it's interesting. We've been exploring banks, credit unions, these types of institutions, and sort of how you offer them best-in-class tooling and technology to provide value to their customers. I think the thing that we've learned is kind of given our stage, given our backgrounds and the product as it is today, and this is something I'd probably tell to the audience if you are early stage, is the bank customer, the bank as a customer is a very lucrative opportunity, but you have to make sure you're ready for it. Banks aren't early adopters, right? They're not going to be very lenient like an early adopter customer. They're looking for something that works at scale. They're looking for something that will provide a stable experience because all of these types of services, and banking especially, is a high trust product. If you mess up your customer, if you're messing with your customer's money, you're messing with their emotions, you're messing with their confidence and their ability to work with you. And so how we've looked at it now is that we'll engage with banks, we'll talk to credit unions, we would like to understand what their problems are, but we also recognize that we need a few more cycles and at-bats before we're ready to confidently serve them in a way that's going to bode well for our growth and ensure that they can keep reinforcing that trust with their customers.
That makes sense. I mean, one of the things that I've seen from my experience, right, especially from community banks, right? They want to compete with the institutional banks that have a lot more resources. So they start partnering with these fintechs that can help them achieve that, right? So
Yep.
whether it's around ML, whether it's around AI, whether it's around data science, looking at tools of that nature. So it sounds like that's an interesting opportunity, right? Because at the end of the day, whether you're at a community bank, credit union, institutional, you still want the same level of service and you want to take advantage of the advances in technology. So it's not a situation where that's not the excuse. Like, well, I'm at a community bank, but you still want what you want, right? So it's not like, oh, I want to drive a horse and carriage when I can drive the, Honda or the Mercedes, right? I still want that experience.
Yep, especially with like business banking. It's one of those things where business banking is starting to get so competitive, right? And it's beyond just checking accounts, debit cards, credit, high limit credit cards. It's much more about kind of going back to this financial operations system that I was mentioning. Every neobank is trying to be a financial operations system for their customers. And the banks are realizing too that if I don't get deeper into my understanding my business customers' workflows, understanding their cash flow, I am at risk of losing these deposits because these competitors are all digital. They don't have to spend any money on real estate. Their advertising is all digital. Sure, it's like there's a customer acquisition cost, but they are able to get the insights needed to deploy loans and capital to my base in a much more efficient way than me. And so we've talked to a few CIOs at different credit unions. We've talked to a few folks at other banks, and for them, sort of, this is a challenge that they're scratching their head on is like, I want to be able to deploy more of these kind of products for my customers. I know it's helpful, but aside from making them fill out a form and go through a really solid underwriting process, what do I need to do to make this more seamless, make this easier, and continue to build their confidence that I am the right financial service provider for them?
I mean, that's a really good point. Because as you were mentioning the capabilities, and especially when you're seeing both sides of this, so you have a unique understanding of their cash flows, and then once you have this understanding, products can be offered to start filling in gaps. So I see that as a perfect opportunity for a bank, and I see that the person with that type of data, right, can also that's very valuable data. So no, very very interesting. Let's just take some other questions that I want to ask you. So with Mercoa and all these things that you're doing, when you're approaching the businesses, what type of feedback have you been getting? I'm curious about that. Especially people who are businesses that are not as a small business per se, not as familiar with this. You have this conversation, probably blow their mind. What's their feedback once they start using it?
Yeah. So what's so interesting for us is usually when a platform is coming to us to talk about Mercoa, the first thing they're telling us is, hey, this is something that's being demanded by my larger customers and prospects. And if I can't offer this to them, they're going to churn or they're going to go with a competitor. And so this is kind of where the power of bill pay comes in with these upmarket shifts. If you are trying to go up market in your segment, right? You're a vertical SaaS company. Maybe you started serving SMBs first. You gained a solid base there. Now you're looking at sort of mid-market customers in that same segment. Those folks are looking for ways to manage and organize their spend. And bill pay or AP, whatever you want to call it, is the key for them to do that. And so, that's one thing we hear constantly. The second thing we hear is for me to build this entire system internally for my customer will end up taking me way longer than they have time for. It's also going to require me to basically double my team or hire a bunch of contractors to try and build this for them in a rapid way. We've also talked to folks who've tried to build these systems in-house internally. They basically tried to sprint it in a month, got to the finish line, but then never even launched the product because of how bad the user experience was. And so what we're finding is that there's appetite to offer these kind of services to customers, but the barrier to actually build it and be at feature parity with a standalone bill pay or AP solution is so high that like companies are looking for shortcuts to be able to provide it. They want to add their like 20% value on top, whether it's tying a bill or invoice to a project, tying it to some sort of job site, and be able to move on while providing the value to their customers. So those are some of the things we see quite commonly.
It's with the answer to the first part, the upmarket shifts. I want to drill into that. So, there are now situations where on the smaller businesses, or they come to you and they say, well, listen, we are dealing with an enterprise, but the enterprise now requires this in order for us to do business. Like, we just can't send them an invoice. It has to be automated. That part is very, very interesting.
Yeah.
That's a other perspective that I didn't think about. So you just mentioned it.
Taking a step back, like so we work with platforms, right? Like you are a banking platform for plumbers, right? Or you're a banking platform for property management businesses. And so when those platforms come to us, if they're small, what they're saying is like, in the property management case, someone will come to us and say, I've primarily been serving landlords and companies with 15 doors today, right? That's how many properties they own. What I have is fine. They don't have a very strong bill pay case. But now I'm starting to talk to a company that has 100 doors across multiple geographies. They have, hundreds of thousands of dollars of spend that they're doing every month. And they're telling me that in order for them to move to my platform, I need to provide them with bill pay and AP automation for them to move everything over to me. And so that's the upmarket shift that we are talking about, is we are helping these platforms move up market, work with stickier and more stable customers, and actually like get that deep spend insight on those businesses from day one.
Really amazing. Have you seen a situation where your service is white labeled, like someone saying, hey, I want to provide bill pay. I like what Mercoa is doing, but I'm going to take their system. I'll pay for it, but I want to put my branding over it. Can you describe that scenario?
Yeah, so that's actually how we prefer it, is like everyone who's providing bill pay through Mercoa, we should not look like we exist in that space at all. And our customers prefer it that way as well. They really want their brand to be the only one that's shown. So we've had customers who have embedded Mercoa into their existing product dashboards, completely white labeled. We've also had customers build standalone white labeled bill pay products directly on top of our API. And in both of those cases, aside from like accepting the terms of service, the user has no idea that Mercoa exists. The platform looks like they delivered all of this themselves.
Absolutely love it. Sai, this is great. We have to take a brief moment break for our sponsor, and we'll be right back.
Great, thank you.
Are you an emerging fintech with a limited budget seeking more sales and partners? Introducing Strategic Generation, your partner in leveraging cybersecurity for sales and partner enablement. Fintechs often lose opportunities due to unsophisticated cybersecurity programs. That's where we come in. Strategic Generation assists with due diligence, security posture visibility, penetration testing, and on-demand virtual CISO services. We connect your systems to our partnered platform, and voila! Instant access to real-time diagnostics and compliance frameworks such as SOC 2 and PCI DSS. Gain the confidence of prospects and partners. Strengthen your cybersecurity program and drive success. Stop losing deals due to cybersecurity. Visit strategicgeneration.com and click on On-Demand CISO to connect with an expert.
Yeah, great stuff. So, no, absolutely. This conversation, man, it's totally awesome.
Thank you.
Where do you see Mercoa going in the future? What do you see?
Yeah, so there are a couple places we see this going. I think when we first started this company, my personal goal was to help the market move bill payments away from manually managed on spreadsheets and checks to a digital first workflow. So I think that's first and foremost. There is a multi-trillion-dollar opportunity in helping move these payments online. But then I think now, as we're looking at the market, we're looking at how our customers are using Mercoa. The real vision here is to enable anyone to launch an AP platform. And, we really see ourselves as becoming the Stripe for bill pay, whereas Stripe is really good at payment acceptance, helping you accept money from anyone. We really want to be able to be the best way for folks to build products, to send money to vendors, to pay vendors, to be able to manage the entire billing and invoicing lifecycle. And beyond that, really thinking about not only how we launch AP automation, but how we help our platforms build out vendor networks and be able to actually look at the other side of the table, figure out what their needs are, and service them either on the payment disbursement side or with products and services that bring the vendor into the ecosystem as well.
Pretty amazing. I feel after this conversation a lot more educated on bill pay than when I first started. Not because some of the topics I discussed on this show, I have somewhat a background in it or understand it. Bill pay is one of those things that I'm going to be transparent. I took for granted, right? There's like 1,000,001 ways to send money these days, especially as a small business. You're like, listen, okay, you could PayPal it, you can send it through Zelle, you can send me a check. Who cares? Just give me my money, right?
Yeah.
But you start looking at it from a digital perspective, and then what's interesting, especially when you add like some data science and AI tools to it, so now you're getting a whole deeper level perspective. And I like what you said in the conversation in terms of managing cash flow. So you see when they're negative, you see, and then it instantaneously, especially if the business has good standing, you can offer a loan product just to soften that gap. It could be a short-term temporary loan because based on their past, that they're gonna receive account receivables to pay that back. Speaking of which, so does that fall in line? So I know in some cases, some get account receivable loans.
Yeah.
Right? And so you see that with Mercoa, you see that happening.
We see AR, accounts receivable, as something that we will ultimately dive into. So something cool that I learned from Bill.com was that accounts receivable and accounts payable are two sides of the same coin. Your accounts receivable is someone else's accounts payable, and so having both of these on the platform, it just gives more flexibility to both your customer's customer, and the vendor. So something that I saw at Bill and at a previous company too was how launching new premium payment methods make it easier for companies to collect on these receivables. So, obviously offering card and ACH payments is standard, everyone's used to that. But now we're also seeing a really cool trend of like B2B buy now, pay later products where, like you have an invoice for like a consulting service that you were using, maybe it's $100K. You could pay that $100K up front, or someone would be willing to underwrite you to pay by 4. So 4 payments of $25K. And being able to offer that type of flexibility to a customer is something that it drives down the sort of cost of collecting on the receivable. It also makes it much more flexible and fit to the invoice recipient's business and workflows. And it helps the invoicer get paid faster. And that's ultimately what they care about, is how can I send out this invoice as easily as possible and then collect on it on time. And so we definitely see like accounts receivable financing and like flexibility on that side is in our purview.
Absolutely love it. Sai, great conversation today. You're one of those people that I can continue to talk to and just drill further into this topic, because as you're talking, I'm thinking of questions literally on the spot. But I have to be respectful of your time. So at this point, I want to give you the floor to talk more about Mercoa, let people know how to find you, to potential prospects.
Yeah, so at Mercoa, we are the embedded bill pay and invoicing API for B2B platforms and vertical SaaS companies. We are happy to work with anyone looking to offer bill pay or AP automation to their customers. You can either use our native payment methods to help with that, or we can work with the payments infrastructure you already have in-house. If you'd like to find out more about us and our service, you can either find me on LinkedIn, Sai Arora, or check out our website, mercoa.com, mercoa.com. Always happy to jam about bill pay, jam about the market, and sort of where we see the ball going, and just to be as helpful as possible. So feel free to drop us a line.
Excellent. So I say this to yes, you are now officially a friend of the show.
Thank you.
If something in the news pops up about bill pay, about something happening, like I don't know, some market thing happens like big, I'm going to call you. I'm going to do a show. I want you to then educate the audience and educate myself on, okay, this is what's happening. What's the impact of the market? Where's the trend? What do we see happening? Whether it's related to cybersecurity, whether it's related to the industry. So I think this is our 100th and 43rd show. I've accumulated a lot of friends of the show that have expertise in just various aspects of fintech, and I'm always happy to talk to new people, especially in these types of topics that I want to get more familiar with. Or to be honest with you, I wasn't even thinking about until it came up on the radar. And now I'm like, oh, I want to learn so much about it.
Yeah.
So thank you so much for that. At this point, guys, we are going to conclude our show. You can find us live every Friday, 12 p.m. EST. Our website is techbehindfintech.com. When you go to the website, please drop in your email so we can keep you informed of future shows. Also, if you are on LinkedIn, visit our page, the techbehindfintech.com. Let me give you our LinkedIn page, because we want to beef up our followers so we can start shooting live straight from the Tech Behind FinTech page. So let me get that page right, and I'm going to put it in our I'm going to put it in the caption in a second, in the comments, and then you guys will have the link there. Having some issues doing that.
Yeah, do you mind if I mention one more thing to the audience?
Of course.
Yeah. So audience, if you are interested in trying to figure out what the AP or bill pay opportunity looks like for you and your customers, we always recommend surveying or running customer discovery on your larger customers, either the ones you're serving or prospects in the market, and dig into the pain points they have around the back office. And I can guarantee you that AP or bill pay will pop up as an ongoing issue. And so with this in mind and these insights in hand, model out the opportunity of serving these types of customers and see if it's an immediate business opportunity you would want to go after. I think this is the one place where we've seen companies have the most success when thinking about a bill pay strategy, is to start with this exercise.
Sounds great. When you post this, this is our LinkedIn company page, our LinkedIn company page, now part of the show. If you're on LinkedIn, if you go there and follow us, it'll be greatly appreciated. Okay, on that note, we are going to conclude the episode. Sai, hang out behind the scenes. Definitely want to talk more to you. And to the guests, thank you very much. The audience, thank you very much for the comments. Thank you very much for the DMs. Thank you for viewing it, whether you view Munch, because we've been putting out clips of our shows in little 1-minute segments. Thank you for liking those. Really appreciate the viewership. To all my people on Instagram watching, definitely thank you for watching. Appreciate you guys. At this point, we're going to conclude the show. Have a great weekend. Make it phenomenal.
Thank you.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.